What to do when the whole world goes a little bit risk off and you're facing all kinds of financial, economic downturns. What's a trader to do? Where should you focus? How should you position? Well, some of you may already have equities, cryptos, various other things, and you're getting a bit of downside. And one of the key areas that we like to discuss is what goes up when everything else is looking precarious. We mentioned before that the two previous non-farms were a turn in the data, and that the data tends to turn and swing and lean consistently. Data tends to trend in same way as price markets trend. And what that tends to mean is that you will get ongoing bad news if you've started to get bad news or contractionary news. Now, we're going to have a big reporting week for the dollar. Don't forget. And in fact, I think Thursday is probably the biggest day. Let's go to the correct screen. Quite a heavy week for Canada as well. So CB consumer confidence on Monday. That's today. Sounds like today. CPI, that's Australia. So new home sales number coming out. By the way, saw lumber is not doing so great. We'll remember to take a look past the lumber chart in a minute. Then final GDP for quarter on quarter, that is on Thursday. Unemployment claims and pending home sales. So new home sales, pending home sales, that's kind of obviously includes the resale market, I would imagine. And then core PCP price index. So quite a bit of big data to come in, and our expectations should be biased to the ongoing theme that is pointing to more of a contractionary vibe. What are you to do? What can you trade? What goes up when everything is going down? Well, one of the things that does happen when you go into a risk-off environment is that there's generally a little bit of a herding into the dollar. Now, I'm not going to make the case too much for the benefit of the dollar, but I will make the case for the downside on the yen, for which the dollar is one of many that you can look to trade during this period. Also note the alert, BNB down, BTC down. For those of you who follow us also on the Crypto Sniper, we'll be doing an update there as well. Contraction, we warned there'd be a sell-off in crypto, high beta, high coming off. Watch out for that video on the Crypto Sniper later. But anyway, let's stick with the traditional markets here and talk about this. Here's a 4 hour of the USD JPY. The last time we made it up that high in around just shy of 160. What was the high? Maybe it made 160. I should be accurate. The high was 160.2. You got spanked really hard down, quite some way. This gave us the upside HVF structure. So long-term trend of upness on the squeezy Japanesey. Yes. Don't forget the catchphrase when we're talking about the yen. There she goes. That's the second impulse, and then we go for a 2 with a little bit of complexity over there, hard sell down. So it's typically news events that give a little bit of stabs. So you're getting these kind of complexities stab. And of course, this was quite some sell-off and a stab down. Oh, disappointment on a data. Now, typically, what's going to weaken the dollar? Any possibility or any economic news that makes it appear like there's going to be more rate cuts having to come sooner. So you don't want the data for this trade to win. You don't want the data to be too bearish. You actually want it to for the USD JPY to be your perfect hedge in risk off season. You actually want American relative strength of the economy to look better than the rest of Europe, Asia, China, etc. But it doesn't have to be strong. It can meet expectations. Expectations can include a degree of contraction in home sales, CPI, GDP. But if it undershoots, then you'll start to get weakness in dollar. We'll look at some of the other yen crosses that we've also provided on this channel as a great way to have a winning trade during a period that is counter-cyclical to maybe being on the more risk-on side. So let's have a look at how this trade has gone so far. Did you note that pullback after running our second interim right there? Boom, chakalak. Interesting. And then a little bit of a rebound. Overall, as we've warned, we expect 165 to fall. And you can blow off, and when that happens, you can have quite an extended wick. Note that. You see this huge wick. It's great when you get out on one of those. So 165 can be well overshot. We expect it to be broken to the upside for the USD JPY. We've spoken about this quite a lot. You can see it initially grinding along there, then it's squared up a little bit along here, and then you started again the upside move to there. You've had a little pullback test after running the second interim. There you go, target 164.9 over there. You can see it. Entry, the last entry should have been in around 157. Stop loss 155 over there. I would optimize that now. I would probably get in with a stop over there. That way you can increase. But I don't chase in here. We did get in a little late on this one because need to jump on some hedging wasn't so urgent initially, and then it started to show in the data that things were getting a little bit soft. And we saw things like the crypto market, gold and silver market slowing down as the anti-fiat category. So that points to almost the pro-fiat category, but particularly on the dollar. But is the dollar just being a boss on all currencies? Well, actually, I don't see it going to be unnecessarily strong against other currencies. This is a lot about yen weakness. So we will come back and have a look at the euro yen. But let's just put the most popular index for dollar strength in there, and that's the Dixie. Let's go up to the day and let's just talk about technical structures. Remember the watermelon smile. Inherently we are a bull bias, but in a slow, methodical way for the dollar. In other words, we expect it to keep moving to the upside as part of a basing event over here. Remember this, let's just take that off because it's drawing things everywhere. Over here, there's your watermelon smile with a toothy grin. That's it. We expect that to consider. You can see this buying up wicks along these. They're almost like hammers. Now you're having a little bit of downside now on this week so far. Hey, it's Monday. Don't let's judge too quickly on that. But broadly, you're going to see basing to the upside. It's not a ripper to the upside, and it's certainly not to the downside. So we're seeing a general mild bull bias for the dollar is beneficial, hence why we're interested in the USD JPY with the yen being weak. But we also like the euro JPY. In fact, we like most currencies against the Japanese yen. Poor old Japanese yen sitting on the super low interest rates, which means their debt has not been allowed to devalue, so the currency takes the beating. By the way, if you haven't already looked at that particular Substack that we've done, we try and make a lot of high value, useful reads, and we put some effort into them. Go and enjoy and have a look at the diagrams in this particular post visually. Okay, can you take me to the post? There's the view the post button. Wake up. Over there, so we were talking about rates up, is currency up, but it's also debt down. Of the first world nations, the American debt is the worst, hence why we show you that chart, which indicates just how much the 30-year treasury has dropped, almost 45%. So go and check out that visually. I try help with diagrams, greatly done by the team. And you can see that the Japanese are actually keeping their rates relatively low. They're supposedly letting them go up, but by very minor increments, and as a result, their debt value holds up, but their currency gets clouted to the downside. So they are on the other relief valve for letting out the pressure in the canister, and that is currency, deval. And they are big on that, and it's a first world currency, and it's going to happen, and that's where we are. So I'm going to keep exploiting that, and you can build and make alpha and profits out of that fact by participating in it. So with going back to the Dixie, go and check out that Francis Substack, by the way, that Market Sniper on Substack. With the Dixie, where do we stand then? Well, the watermelon smile, yes, to the upside, but where are we with that on a more lower time basis? Because there's quite a lot of up legs and down legs in that. You actually, for example, you had a corrective period here with the dollar. When you had reached 106, you traded right the way back down to around about 104s. Now we probably see this as a little bit of a rising wedge. So you've had a bit of dollar strength since here. You surge, grinding up. A little bit too much, come a moment, and then we can have a little bit of a corrective dip here. So data rich week coming. Don't forget, first Friday of the new month will be our live trading day, as well as the non-farm payrolls number, which you can join us for there. And with that very strong ascending grind line, we would expect that probably to break to the downside. However, the data was super good. You could get first to pop out the top. That's the dangerous thing about rising wedges before you get a dip down. We refer to that as type 2. So you can learn more about the HVF methodology by clicking that first link below, becoming part of our community, and checking how we block and cover long trades that are maybe risk on nature, that are long term, that we wish to continue to hold, but protect against a little bit of a risk off time. And there's the real possibility of a demand destroying event. We've had a little bit of escalation on the Russia-Ukraine side. I'm sure we'll see an escalation to Lebanon and beyond, all in the name of getting Hezbollah and flattening all in that's in the way. So watch out for that, as well as potential escalations that could lead to demand destroying events, subsequently market waking up in a little bit of a funk. So that's a little bit on Dixie. It's not unbelievably strong in actual fact, and the near-term forecast could see it actually take a little bit of a sell-off, but it has been working its way up, which is typical of our bigger time frame view in the watermelon smile. You keep making marginally higher lows and marginally higher highs as you sort of crescent back up to a degree, and that's our take for dollar, largely against the euro, which is around 56% of the Dixie. That said, you're not wrong, and we have in some ways, thanks to the European currency being less part of the overall macro story than the dollar has been, we have in some ways very good structures that we've traded on the euro, Japanese yen as well, and those go back some way. So we've spoken about these before as well, when we've said the great currency unwind, the largest nation state essentially that is in a major devaluating currency cycle. And one of those draws we can share with you over here. Let me just check something quickly on the European Japanese yen, which is there to show that the main part of this trade is the weakness in the yen. I would still like to do this draw in the following way. So I'm going to take it down to 2 weeks probably, just to split some of the data so that we can do the draw and show you what we've had happen on the Euro JPY on a fortnightly chart. So let's put on our HVF draw tool, available to all our members after a year for use, getting it set up right now as we speak on the TradingView setup, if they will moderate it and finally let us print it and let our existing members get access to it. Here it goes, here it goes. So overall, this is called from a 176. So that's quite some call. And this was an excellent quality pattern. And you can see that you had quite a bit at our second interim. You did have some churn here. Quite a lengthy broadening pattern and a pullback right down to there, as part and parcel of making our 155 level on the yen. You also had a bit of broadening out and a bit of chop and churn as you made the first interim, which was made on the slightly dotted line there that you might just make out over there. So a lot of chop and churn. Then once you decided to get going, you trotted on, you jogged on nicely to the second interim. And I'm arguing right now that you're in the jog on nicely stage to 176.696, which at the same time is likely to see the USD JPY running the 165s. So as we've highlighted before, the yen is in a weakness funk. The yen is a short that you all should have on that you haven't. This is the free money trade you're not taking at the moment. By the way, I would be slightly circumspect once it's run the target for a bit. I would expect a bit of progress decay. We've already shown you do get pullbacks. There's nothing as a one-way bet, as you can see in both those instances, and that's where the value of HVF method comes in. This was such an extreme wick, and I think that was very interesting moment that it came into play there, 2022. I think it might have been the shooting of the then Prime Minister, a super foxy set of events, and I'm still not sure what actually happened, and what we were shown is what really happened. But anyway, let's just forget that for the notion. for now, I would say those that could have got in could have had a stop there even sooner and even more aggressively later over here. Look how it's progressed. This is a very good line of efficiency. We refer to it as a line of efficiency. In other words, from the triggering event. Now you see a couple of highs there. You could have got in a tiny bit earlier, you could have gone in a tiny bit tighter, so your risk would be there. And this is the gradient of benefit. How much time are you on risk versus how much juice are you getting out of this squeeze? Now, were this to complete to target in a similar rate of efficiency without changing your Pythagoras line, your hypotenuse, you would be finding yourself with a triangle of success like that. Now, in most currency markets, you don't get such a gradient for such an extended period that delivers such a high amount of alpha. By the way, it wouldn't be a full close. We would expect further devaluation of the yen subsequently, but there's likely to be some reaction. You might blow through quite quickly and then have a lengthy period of churn, chop, and pullback for a while before reasserting. However, bigger and more is indeed probable, given that the requirements in the crisis are unlikely to go away. So yen is a short, an absolute devaluing currency right now, and it would be great to have borrowings in yen and own physical assets that are going up in value in an inflationary environment. I would love it. Tell me if you've got that investment bank that can help me with that. I once had yen-based mortgages when in the UK during that period, and was paying a lot lower interest rates as well. But the currency wasn't devaluing at the rate that it is at the moment. Okay, so that's the Euro JPY. That is one way that during a period where your crypto's down, gold and silver's not going up, various things. There's a bit of a risk in the tech stocks. I wouldn't say so much the Dow Jones. The stocks actually look like they're holding up a lot better than most other things. But there is an aspect about the tech that is kind of getting fluffy. A little bit of a possible shooting star here. The last time calling indices short's not something we do very often, and it was a very bold thing to do. And we got that one correct on the head and shoulder draw. That target was made. But you've gone on to make further highs. This is small beer really on a fortnightly, 2 weeks. A little bit of a pullback. Okay, so it goes, boom, 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 boom. A little bit of a gap fill to go on there. We did highlight in our trade battle, guys. We went and put our rival in the sabotage trade. We went long up top here on the open that was relatively bullish on Apple, on the basis that you'd had a bit of a blow-off move and that it would correct to the downside. So Michael Saylor, 2012, Apple stock prediction goes viral. Here's what Bitcoin bull got right. Whoever is selling that stock is a moron. I'm not so sure I'd say that about now. Michael Saylor sometimes a little bit interesting with his outbursts. How many chairs are you sitting on? How many chairs? You see, Michael, the difference between portfolio theory and diversifying your interests and not having 100% of your wealth in Bitcoin versus how many chairs you sit on, which is a physical certainty, is slightly different, by the way. But nonetheless, thank you for the rather non-relevant comparison. How many microphones are you talking to me on this podcast on? Again, Michael, that hasn't moved the narrative too much, I'm afraid to say. Actually, once you've assured that certain physics are in play and all the elements are functioning, doubling down on microphones is not quite the same as having every single asset all in one category, especially if it has the habit of 80% crashes, and that's usually when you most need your money. Sorry, Michael. Hey, I don't know. But anyway, Michael Saylor is deserved to be quoted in TradingView. Yours truly is certainly not, and many others. You were a moron for selling Apple stock. Okay, maybe not. But certainly I would be a seller at this lower point level, and we're getting a little bit of a corrective thing. But as I say, shorting statist, we call it the FU portfolio, the hold your nose portfolio. The statists are the ones getting the money. They are getting the borrowed into existence money for developing the surveillance finance world. That is the dominant control structure that is being airlifted and dropped down over you, the gilded cage. And that is why they are swimming in military industrial complex type contracts, such as Microsoft, such as Amazon with servers for the dark state, and everything else that they're collecting off you on, your Mossad-driven life book, which basically profiles us off. Anyway, enough of that. So in the event that we have a little bit of a correction, for example, there's the big equity we haven't spoken about that joined the 3 million club, that seems to be very much positioning, and lots of robots in view, and all of that, highlighting what a chip maker it is. By the way, this is log scale. Just reg scale that for a little bit to see what this has done in what sort of time. So, I mean, that is unbelievable. It's unbelievable that that company has added that amount of value in that amount of time. What is probably the case is there's a wall of money chasing in on positioning, and a little bit of a tip and a nod, but I would doubt that they've added economic value number that much in that time. So we've re-log scaled it so that it makes semi-sense. But essentially, at the let's take a logical point, the base or bottom of 2009, everybody knows you could have had this stock for essentially following stock splits, I'm assuming at 14 cents, which is now 118 cents. It's almost like $140, 118. It feels like 14 cents. You would multiply by 10, you'd get $1.40, and then you have to multiply it by literally almost 100, 75 odd, to get it to 118. So that's an unbelievable amount. This is the demand for chips, no doubt, and the shortage of chips. We can only wonder what's coming for us as humanity. Do you remember during the events of March 2020 how suddenly all these vials with unspecified components were all available on such a scale that everybody could receive their shot? It's kind of interesting that, and we can only wonder in terms of chips and how they plan to run the future world, and all these, by the way, Elon Musky type things, Neuralink, etc., that are telling you that you won't need a phone, just a chip in your body. I'm not so big on that idea. Anyway, can't help but get a bit resetty. Let's stay with the agenda. If Nvidia is to roll over and sell off a little, which it's fairly abrupt, but it's nothing wet the bed yet. It is a Monday, however. Fridays can be nervy, so if that were to continue, who knows? But it wouldn't shock me that this still goes a lot higher in due course. So let's be clear. Hyper stagflation. The hyper is the extremity. It's the magnifier word. Stagflation, the inflation side, is actually going to increase the value of future dividend flows out of businesses that are generating lots of super needed valuable chips. As someone who's buying washers and dryers and things for new properties, I can certainly say they all want their smart toys, and you all got to use your phone now to run a washing machine and a dryer. I don't want that. I want analog. I want old. I want something I don't need to use my phone for. I don't want apps. I don't want everybody knowing when I switch my kettle on, when I start my wash, what I do, everything. I want to go back. I want to go back to analog. I want to stop giving data. I want to have this orchestrated, organized theft of everything I do pumped into the ether world. I want it to end. But you know what? Unfortunately, I don't have the power of the likes of Samsung, the banking cartel, Larry Lowell Finkelstein, tokenization of everything so that we know exactly what you own before we throw you out of it, etc., and all the rest of the game. But that's where we're going. So, yep, that's Nvidia certainly having a little bit of a correction, but it won't shock me if it bottoms out and continues a little bit further. So let's have a look at, did we pull up the IXIC? I think we did. Did we do the SPY? It's just worth having a look at. So funny enough, equities They are coming off a little bit, but generally these guys have been fairly strong. A little bit of a shooting star, could be an off week, but I'm the last person that will call shorts on an equity. Even when the demand destroying events start, it's often the last thing that rolls over will be the equities. You might see the bid come back into bonds first. You might see the dollar get a bit more of a bid versus, say, the euro. You might see a lot of things happen before the. But however, if they do eventually crash, we have seen things throw down in fairly disorderly manner. But I'm not overly positioned outside of miners in terms of that. And as I've said, I think the USD JPY will serve you very well. Is there an equity in the event of a major downturn that could do well? So we will give you one community call, free gift from us to you to have an understanding of what it is we do in terms of our trading positioning and how we play it out. And that would be for me UPS. So in terms of UPS, we've seen this particular fella, and I'm going to take you from small to large. Normally I do it the other way around, but again we're going to use our draw tool, pop him in and draw that to the downside. So inverted HVF in structure there. Overall looking for a 120.27 on that structure. However, potential for, he says, overperformance. Just spoke to the community about this one. I reminded them this morning. It's actually a community find. Again, well done to our boy James. And this is a larger possible head and shoulder. I did a 2 neckline draw. I did the 160 and the 155. The 155 tiny bit more aggressive. So that looks at that low, armpit 1 and 2. That would be kind of small left shoulder. That's a very big bloated head downside. We got a grind line here with a rising wedge with a sell and then another sell all coming here. That gives us our right shoulder and that triggering event. Excuse me. So that makes this inverted HVF an attempted rally. It was a rally back to the neckline. You can see it. Boom. Remember a break and then the rally back to the neckline. Squeezy, squeezy, Japanesey like she does. Nice little breakout to the downside. But the presence of the head and shoulder gives us the possibility of a deeper, further target, which in the more aggressive side is 102, while it's 109 on the less aggressive version, which is the 160 neckline over here. So you can decide, but we think overperformance through to 102. And by the way, if you were to get 102, it quite possibly could point to 2 digits. You could trade a 99, a 97, a 96 with a little bit of overrun on the downside. Why would this be the case? Well, we can only guess. UPS maybe losing market share generally against the others, like DHL and FedEx or whatever the case may be, or generally consumer not doing so well, having to rein back, less packages being purchased, less things being delivered, etc., etc. So that would tie in with a demand destroying event or just a ongoing weakening in the economy. So you've been given UPS as a possible short with targets and values. Go back and freeze the video if you want to see the levels, as well as USD JPY to tuck you in safe and sound at night, to be making money and alpha at a point when many other people are watching their cryptos going down, the gold and silver is going sideways, even a bit down. The equities could begin to throw it down, and so many other things. So a short right there. Of course, bond portfolios hopelessly underwater for the last 2-3 years since the top call that we provided on this channel in 2020, in August of 2020, after the events of March 2020, which were the blow off high and the seminal 40-year trend change. It was the first time we called the turn in bonds. So that's unbelievably big call that has serious repercussions, meaning that interest rate hikes and spikes will be one of the ways they will hollow you out and make things unaffordable. For those of you buying vehicles on HP, properties with unfixed mortgages, by the way, they might even find wiggle room to get out of fixed deals and pass the cost on to you. So be careful on usage of debt. at the moment in this environment. Don't forget the great taking, own your own share certificates and many other things. And by the way, defund the tax extractors by not making unnecessary contributions to their system. By doing that, you can find out more. Click the first link below, book a call to chat with yours truly, the Market Sniper. In fact, you won't be speaking with me, you'll be speaking with our team, but to get everyday updates from me, much like what you're getting here right now today, with 2 ideas being presented and the reason why technically on other things, share chats and communications and intel with other smart, like-minded people, much like yourself, who will be maximizing their gains in the crypto bull market when it returns, and when that will be, the gold and silver bull market when it returns, and in the meantime, making money or at least countervailing any losses on long-term portfolios as a result of any downside due to economic downturn. Okay, I'm Francis Hunt, the Market Sniper. Thanks for watching. Hit the like and the share if you feel like it. If you don't, please don't. We'll catch you next time. Bye for now.